Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast New Year's edition. Coming at you with some hot New Year's predictions. I'm Andrew Hall. Ben Nye with me here. How are you?
I'm doing well.
Good.
Feel rested.
Yeah.
Feel good after that break.
Yeah, nice little holiday break. Just had a couple days off for Christmas. We're kind of back in the swing of things. Crazy time of year, end of the year, but we wanted to make some predictions for 2017. It's going to take me a while to say 2017, but I'm going to get there. 2016 was apparently an awful year. That's what everyone has been saying. So my prediction is that 2017 by default will be a great year.
Yeah.
Because it's got to be better, because if you say it's worse, then you have to go back and say, well, 2016 wasn't that bad.
Yeah.
And nobody's going to want to do that. So we're going to jump in. We both have 5 predictions, some market and investing related, some not. And we'll kind of go in. Ben, you want to lead us off?
Yeah, the first one I went to Belize over the Christmas break, and one of the things that stuck out to me was just how depressed their economy is relative to where I think it should be.
Mm-hmm.
And one of the things that was very interesting is that they have been pegged to the dollar 2-to-1 since 1978.
Woo.
Because their economy has obviously tracked the U.S. economy so well over that 40-year time frame. To give you an idea about where the Belize economy is right now versus where, they could change monetary policy, 10% unemployment rate. 10% unemployment, less than 1% inflation. An unemployment rate higher than the United States, an inflation rate lower than the United States. Again, they've been pegged 2-to-1. Debt to GDP, 68.3, not terrible, but if they did devalue the Belizean dollar, that would help their debt to GDP ratio. Peso to US dollar, by comparison, since the mid-90s, so 20 years after my time frame from 2-to-1, 7-to-21. That's how much the peso has depreciated, by 3 times. And the Belizean dollar has been locked at 2-to-1
For 40 years.
for 40 years.
That's insane. Anything being locked to anything for 40 years is kind of crazy.
I wish I had a Belizean 1 cent piece, because it is incredible. It is plastic. No joke.
No.
It is plastic monopoly money.
Come on, Belize, do better.
So my kind of out there prediction for 2017 is that Belize is going to devalue the Belizean dollar by 3-to-1, maybe even 4-to-1, because they need that to happen to increase growth. And they did that, and all of a sudden it's in the news, and people say, well, it's cheap to go to Belize now, and you'll see more tourism, and I think that would actually be a good thing for the economy.
There we go. So sticking with international theme here, I think we're going to have another Brexit style exit. I think it's going to be a Nexit, Netherlands leaving. They have talked about this before. There has been some polling. One poll shows as much as 88% of the Dutch. That's Dutch, right? Yeah. The Dutch, the Netherlandiers, wanting to actually leave the European Union. Some notes. It's the 6th largest economy in the EU. 5th if you take out the UK, which the UK is apparently taking themselves out. Relatively stable economy compared to some of their peers. So debt to GDP is 65.1%. Not great, but if you look at that top 6 group of countries, that's the lowest. Unemployment of 6.9%. Compare that with some countries that are kind of comparable economically or even larger. France is over 10%, Italy over 11%, Spain over 22%. So they seem poised to be able to sustain themselves. They seem to have that interest. We've talked a lot about populist political movements. It seems to very much be the thing, and I think the Netherlands going to pull the plug on the EU.
Interesting. Do you think that'll be good for them, or do you think that'll be bad?
I'm very biased on this because I just don't like the idea of large unions. I think I've talked about this before, like even things like the United Nations, which is everybody's talking about right now, like with Trump and his attacks of them. I think some of those things are almost antiquated. I think the idea of formal economic alliances, it seems like such a concept of like the 80s and 90s. So I'm kind of in favor of it in general, so I tend to say yes, that's good for the Netherlands. that being said, I do think they're kind of in that middle ground where, yeah, they're a top 6 economy, but significantly smaller than most of the countries in that top 5. So it does kind of become a little bit more of a guessing game. With the UK, I felt very confident that kind of their service-oriented economy was going to be okay. So yeah, it'd be interesting to see. I think they'd be a very different case study.
Well, it's interesting you bring that up about the UK because that actually is one of my predictions as well. I think the UK GDP right now is forecast to grow 1.2% next year on a real basis. Put this in perspective, California's GDP in annualized over the last, for the period ending in June, was 2.25%. So that's a 1% spread. However, my prediction is that the UK economy is going to grow faster than California's economy in 2017. And kind of saying to your point, I think that they'll be able to renegotiate a lot of these deals that are kind of the vestiges of the Soviet Union and what they were doing to combat the Soviet Union. And I think that a lot of California's economy is built on these, there are a lot of legitimate businesses in California which have very legitimate cash flows and et cetera. But I think there are also a lot of money going to startup, and I think that has been starting to slow. And I think you'll see that trend increase in 2017 as people figure out who are the winners and losers more in Silicon Valley, and I think the losers will start to pay a steep penalty, and that'll result in downdraft, not necessarily a recession in California, but on a relative basis, you'll see the UK economy grow faster.
Very good. You mentioned kind of the UK and figuring out, almost negotiating what's this new UK going to look like outside the EU. And I think that's kind of a theme we're going to see on a couple of fronts, including in the US. Obviously, we heard a lot about trade negotiation, deals. Also, a hot button issue is the idea of regulation under Trump, particularly regulation of financial institutions. A couple things we know about Trump. He wants less regulation. He's also a man who I think holds a grudge. I think he can get somebody in the crosshairs and not let them out. And I also think sometimes he contradicts himself. So I'm going to go out on a limb here and say that we will see a reduction in banking regulations, which it seems like the market's kind of pricing in. They're kind of expecting that. We've seen a really strong run of financials, and that's not all driven by Fed action. I think a lot of it is speculation about what we're actually going to see regulation-wise. But while we see a widespread decrease in regulation there, I think somebody's going to cross Trump, tick him off, some financial institution, they're going to get in the crosshairs and suddenly become a whipping boy. So simultaneous to a big regulation decrease, we're going to see somebody made an example of. Not going to venture a guess as to who it would be, but my guess would be, generally speaking, I think it'll be an international bank.
Do you think it would be anybody in the fund world? Like a probably not like a BlackRock, but someone like that.
Yeah, it could be. It could be.
With fees and kind of, I don't know, that's just one.
That's a good thing to think about.
Interesting you bring up Trump and the effect on bank regulation. I think that right now that could result also in faster economic growth. I think a lot of people have been, that's one of my predictions, my third prediction is that the U.S. economy will grow nominal GDP at or above 5.5%.
That's 5.5 people. That's a revision.
That's a revision up.
Pre-production email, Ben said 5%, and he revised upwards to 5.5.
So that may not seem incredible. I think that real...
Sounds like a huge number.
It sounds like a huge number. I think that real GDP could grow 3.25%, and inflation could be 2.25%, and you say, well, it doesn't take much to get there. But for context, the street estimate has real GDP at 2.2% and inflation at 1.9% for a total of 4.1%. So I am 1.5 points above the street right now. So what you're seeing is a lot of people, the market's kind of saying well, the economy is going to grow faster under Trump, but nobody's right there yet. They're still playing cautiously, and I think that we will get that 5.5% growth.
There we go. Speaking of growth, I think we've mentioned financials. I think another sector to keep an eye on is actually the healthcare space. This is a highly politicized space. Everything from Obamacare, what's going to happen if we're going to repeal it all from day one, all the way to, Trump's not going to let people die in the streets anymore. He's not going to let that happen. Huge problem here in Marietta, Georgia. Tons of people just dying on the streets, can barely get to work in the morning. He's not going to allow that. And then obviously you have things like drug pricing and kind of that hot button talking point. All that being said, I don't see a major change coming to Obamacare and the Affordable Care Act in 2017. I think it's I think it's very easy when you know that you can't actually repeal it to stand on the Republican platform and say, I want to repeal it. I'm voting to repeal it. But now that you actually have positioning to actually repeal it or make significant changes, and you could adversely impact a lot of your constituents, I think it becomes a little bit more of a numbers game to these voters. So I think we're probably going to see some subtle changes, maybe enough changes to make it called Trump care as opposed to Obamacare. But I don't think we're going to see this wide, sweeping repeal and replace and recreate type motion. Because of that, Obamacare has been pretty good for the healthcare sector in terms of the rally that it's had. I think the thing to keep an eye on is maybe XLV here, XLV, which is basically the healthcare ETF. For some context, XLV pushed up to 80 just about in mid-15. It was under 40 in 2012. It touched 76 in early November just before the election. It's now backed off a little bit more than 10%, so trading like high 60s, around $69. I think that thing could run upwards close to 100. I think 100 it could run all the way up there, which would be a significant run, but not a huge premium over where we saw it not that long ago. So if you think, hey, its ceiling was 80 with a lot of uncertainty still baked in, I do think it could go to 25% above that.
Interesting call. I don't have a great segue for this next one, but
brutal. We were doing pretty good there, by the way. We were on a roll.
The Snapchat, I think, will IPO in 2017, and I think the IPO price will be above what the $25 billion that we've kind of seen floated around in Bloomberg and Wall Street Journal and other places.
Yeah.
I think that Snapchat will IPO at or above $37.5 billion, which would be a huge IPO. But the thing that Snapchat does well, and I think almost in contrast to Twitter, or maybe back into Twitter's early days, if you look at the parallels of a lot of these social media networks, is that they seem exclusive, they seem they seem new, exciting, and that you have to kind of get into the network before you really start to see these benefits to you as the user. But once you do, it's kind of you remember the secret club. That's what happened with Facebook and how they grew. And I think you're seeing the same thing with Snapchat. A lot of people are communicating over Snapchat instead of text messaging, which is a really big hurdle to come across and shouldn't be understated. So I think that Snapchat is a powerful platform that will IPO about $37.5 billion and will actually close a year higher than its IPO price.
A couple things on Snapchat. I think they integrate outside content and advertisement better than any quote unquote young social network I've ever seen. They are already light years ahead in my mind of how they integrate advertisements and paid content compared to Twitter. And Twitter's a significantly older and more established platform. So Snapchat's done a really, really great job there. I also think they probably could have IPO'd a year ago. I think waiting was very significant because, as you said, it's kind of all about that secret club getting in. They're continuing to grow that base. It's continuing to become increasingly ingrained. Just little things. I mean, you kind of see this like on Twitter. People will change their Twitter profile picture to the Snapchat little screenshot there so that you'll get followed on Snapchat. So already they're infiltrating so many places and starting to really grow that base. So I think they're really well positioned. I think you're kind of spot on in terms of the IPO is going to be higher than people were expecting. I think it's going to keep running. I'm kind of with you on that. Along the lines of running, this has nothing to do with running. The Dow, everybody's talking about 20K, 20,000, it's the big number. I think we're actually going to see 5 different thousands touched for the Dow. And what I mean by that is right now we're at 19. I think we're going to see that. I think we're going to see 20. I think we're going to see 21. I think we're going to see 22. I also think we're going to see 18 at some point. Don't know if we're going to go 19, 18 and then bounce back. Don't know if we're going to go up and then fall off. That sounds really staggering, but that's a 13.64% fall from 22K to something in the high 18s. So that's not a huge move. For context, if you take the peak of this year to the trough, it's about 15.5%. So that's, again, sounds staggering to think something in the 22s coming all the way back to the 18s. But I think we're going to see a decent amount of volatility, nothing crazy. But yeah, I think that's what I'm feeling.
Well, Trump likes to be unpredictable, right?
That's right.
You got to see
Let's
those
keep
numbers.
us guessing.
Yeah. So back to your theme about running. The segues are getting better.
These are
and
good.
better.
We're getting strong here.
My last prediction is that the Washington Huskies will have a national championship winning season. So either they win in 2 weeks, or they end up winning, but because of the 2017 season. So
I like how you hedged that, because I was about to say that's going to be the first prediction to definitely be wrong.
I'm getting a 2-for-1 there.
It's going to be the first and the last prediction to be
Yeah.
wrong, because they won't technically lose next year's national championship till January.
Well, fun fact, the Huskies have never lost a national playoff semifinal when I've worn this jacket on a Thursday before
That's a
the
great
game.
point. That's
So,
a great point.
You know, we're seeing the
So
we're
smart
already seeing
money's
the-
on the Huskies.
Yes, there is an internal office bet on it.
There is, and we'll give you one guess as to which side of it Ben's on. So that's yours. The last one I've got. I think active management is going to outperform passive management in 2016. Now, that's a really fluffy, nebulous concept to try to actually measure and insist on. And I think because everybody loves to kind of throw darts at active managers right now, you may not hear about it. But I don't think you'll be reading headlines this time next year like you're reading now, which are, once again, passive management outperforms active hedge funds or mutual funds. So I do think we're going to have a year where there's enough volatility that's going to be a little bit more of a stock picker's market, so to speak. I also think it's going to be a period. I don't think it's going to be like 2015 where you had really narrow market leadership. I think we're going to have some sectors that do really well and some breadth. So I don't think it's going to be a market that's just, goes one way and it's led by maybe two or three dozen stocks even. I think it's going to be pretty diverse. So I think it's going to be an environment in which people that still do their own valuation, still do their own weightings, still do their own asset class selection. I think that's going to be the type of environment that's going to thrive as opposed to just generic passive investing. So those are, I guess, 10 total predictions.
Yeah.
We'll try to keep tabs of these. We'll do a blog post on Narwhal Capital. We'll also have maybe check in quarterly there. Obviously on Seeking Alpha, hit subscribe, follow us if you're on YouTube. Follow us, show us some love. And we're still on iTunes, people. So download, subscribe, delete everything, download it again. Helps us out a lot. We appreciate you being here. We're going to keep doing the podcast all through the year. Lots of content coming as we kind of get back into a little bit more of a normal swing work-wise. And hope you guys have a happy new year.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.